say, if I were to take a step back, and I think Gergely showed the numbers in terms of now half of the 10 largest financial institutions in the world are payment companies, or all the examples that Ritesh gave, it's very, very clear that payment is taking a big role, and digital payment is taking a big role in financial services. But I think there's a question of more fundamentally, why, and isn't it a bit confusing? Because when we talk about blockchain and NFC and CBDC, and it all looks very, very confusing. But I think there's one fundamental reason which shows that it's quite simple actually. And I'll take an example of an industry I really like, which is the advertising industry. We all know Google and Facebook today, but the reality is that did anyone care about the advertising industry 15 years ago? Only people who are in the ad industry, but most people didn't really care about the advertising industry. What digitalization and digital made is that it fundamentally changed the industry, because before it was big ads on TV, for example, big ads in the newspapers. Ads in newspapers pretty much disappeared, and now we've seen ads in TV or on TV. A lot of that moved to YouTube, for example. But there was a new product which didn't really exist before, which is what we call search and display ads, all the ads that you see basically on your mobile phone, when you type on Google, etc. That didn't exist, and that couldn't exist. It couldn't exist because before digital, you couldn't target people individually. So show me an ad just to myself, a micro ad for a few half of a second, which made money from a pure business model standpoint. It was impossible. Digital made it possible. And basically that's what we're seeing with payments. That before, you couldn't make it a micro transaction that was personalized, that made money, where you counted billions of them, and suddenly it was a big business. It couldn't work before digital. And now it works. So that means that there's a trend which is very, very clear, that it's not going to stop. Now that we've moved into this digital world, all of those micro transactions where I can pay, remember before with the credit cards, you could only pay, for less than $10 and $5. And you remember, this world now, people want you to pay for like, half a cent. So this trend is not stopping at all. Which means, going back to your question, it's very clear that for anyone, especially for consumers, the need for education is clearly there. It's clearly there. Why? Because should I invest my money into an NFT, which I don't know what it is? It's some kind of digital asset, and some of them are selling for $65 million. Is it a bubble, or is it something which is here to stay? I think that's one of the I think main objectives that we had when we created those courses, and took all of this into account, which is, are we talking about things which are here to stay and which are really important? Are we talking about hype and bubbles where some of the crazy things that we used to have in traditional finance now are getting into digital finance? And I think the only answer for this is I think working with the right people and trying to get our own views on this, and which is, I think, what we're trying to do across this virtual table.
Thanks. Fabienne, what is your opinion on that, on the financial literacy perspective? Oh, we cannot hear you. Could you please unmute yourself? We still cannot hear you, Fabienne. So, Felix, could you please check with the IT?
Yeah, I was sorry. The host did prevent me to unmute myself, which is actually a great introduction to the role of technology, right? In expression. But I think what cash before was allow you to be, to be complete, to act in complete privacy. And I think people still use cash today for good purpose, and a lot of people still use cash because they have other objective, which might not want to be very transparent. what digital has brought is a very difficulty. It's very difficult to remain anonymous in a digital world, right? And so one of the challenge of digital finance and payments is, first, is it desirable to be anonymous? That's the first question. And two, what kind of control do you want to give in the hands of the end user? And that's where literacy comes into play. Europe has the lead in terms of privacy, and GDPR is a good example. But is it going far enough? I don't know. But today, for instance, there is a good report published by the Monetary Authority of Singapore recently about what are the components of the new digital infrastructure. Payment is one of them. But another one is consent, user consent. So I'm a user, do I consent to do a certain number of activities, and do I consent to share the data to other parties? So I think the literacy is not only, and who is right, it's about payments, but the literacy is more fundamentally about how do human beings, which are not digital constructions, how do those people work in a digital work in terms of retaining their right to privacy on the one hand, but on the other hand, to be sufficiently transparent to combat fraud of payments. I think we'll talk, I probably will come back to fraud of payments, because I think we didn't really talk about it, but to me, it's one of the biggest impediment to a fairer society as well. But I would say literacy, yes, on payments, of course, but especially on being a digital citizen and what does it mean from a privacy and a consent point of view.
Thank you. I think fraud is indeed one of the next questions I was planning to ask. Maybe we give before Ritesh the floor to respond to the same question.
Thanks, Fatima. Ahoy and Fabian has covered greatly on this. And let me tell you some of the surveys that we have done recently. Yes, financial literacy is the key. And it's not only in specific geographies or the regions. As I said about the buy now, pay later, or I said about any other payment instruments. If I can just give you a recent survey that we have done, 78% of the people in developed countries or well-developed or where the digital adoption for the payments is greatest, 78% people do not know when they make minimum payment for their credit cards, they incur higher interest on their outstanding debt. And that's the condition of a financial literacy in a countries like UK and European market. And so yes, we definitely need to literate people and actually our upcoming generation as well, because we are embedding finance. So it is taking away the friction, right? But if you're not being mindful, then we are pushing people into a more debt cycle. And the debt in this economy, and globally for that matter, is growing regularly. Because the view that people, it's YOLO, right? You only live once, and they want to live in moment. And when they have got the instruments which can enable them to purchase things without having a proper financial checks and give them the credit, that's opening up a door for a catastrophic situation in the future. What we have seen in past, we don't want to repeat ourselves. So the financial literacy is key, and whether it's for the financial inclusion or non-financial inclusion of the banked, underbanked, unbanked, for everybody. And the financial education should be part of our curriculum. And I'm talking about the basic curriculum in the schools. We need to teach our children.
Thank you, Ritesh. This is actually part of the mission of the EBTN members. Actually, many of our members are very active in this field. We even have a financial literacy committee. I see Sladiana is in the webinar. She is the head of the committee. So we are very active as EBTN in this field. moving maybe to the next question, Fabienne, since you are covering the business side of the European perspectives, I would like to ask you more question regarding ESMA. How ESMA evaluates changes on payment innovation on the European market? And also maybe following to this question, what is the position of the European market on innovation in payment compared to other global markets?
So maybe the first question, and to, my role at ESMA is indeed advising on innovation, more on capital markets and payments, but maybe for one of the learning, just if I can look at that, I work both in capital markets and payments company, mostly B2B infrastructure. I work at Euroclear and Swift in the past, and we were not talking about each other's business so much. Euroclear was focused on capital markets, and payment was just something you did because you had to settle some bonds and equities. And Swift was talking payments, and capital markets use payments, but you know, it was not the core of the discussion. This has fundamentally changed, and I think ESMA being at ESMA, as you know, is about the market authority for essentially on capital markets, but an EBA is more looking at the banking side. But there's lots of discussion about how can we increase innovation in Europe, and fintech innovation is one point in time. We all know the European Digital Finance Roadmap. And while doing that, how do we ensure customer protection? And I think ESMA is very, clear on supporting fintech innovation, also to increase the strategic independence of Europe, which is a topic which is beyond ESMA, which is how can you guarantee that your digital infrastructure is self-contained, self-sufficient in Europe, and not depending too much on other geopolitical blocks, whether it's Asia or the US. So that's one big topic. For that, you need to create innovation. But that innovation needs to also make sure that there is no, innovation happens when you don't have too many incumbents for too long, right? If you have incumbents player for too long, oligopolies, they tend to slow down innovation. There is an aspect of how do you favor fintech innovation. Customer protection is a big topic at ESMA, and also transparency. Like there's lots of discussion about beneficial owners, how to identify the ultimate beneficial of whether it's a payment or a securities transaction. Is a very important topic for ESMA actually. And then, but we'll talk about that later. Also, for payments specifically, the European instant infrastructure. We didn't talk a lot about those platform aspects, but the world is going to instant payment, which means that you address the current time lag that you have today. When you do a payment, it takes a few days or more before it's actually cleared and settled. So instant payment will change that. What is the best model for Europe of instant payment? What is the compromise between orderly transition to instant payment and innovation? These are also lots of discussion happening. But I think it also touches upon Ritesh, it's two worlds colliding. It's a world of cash, the world, sorry, of debit accounts, classical banking, if you want, and the world of cards, which was hermetically separated in the last years. Now this is completely colliding. So everyone is going into everybody else's terrain. And that creates opportunity, but also challenges for regulators and policymakers.
Thank you, Fabian, giving us more insights from the European perspective. I think I'm asked to come to the end of the panel discussion, but before I finish this part of the panel discussion, one question to Huy regarding the education and you were talking about the adaptation to the local environment of the education. What are the main steps when you localize the training? I mean, what are your experiences in localizing it, especially in the context of Budapest Institute of Banking, for example? Just share with us your lesson learned and experiences. Felix, you need to allow now to unmute.
Yeah. Okay.
Yeah, I was trying to unmute myself. At the same
It's not working. I tried the same.
No, thanks a lot. In terms of localization and perhaps even before answering this question, is the question of more the audience. Who is the audience? For this, and localization is, I think, a part of this, which is the audience is always a difficult question, because if we did a very, very specialized course on, let's say, how to use VBA on the trading floor, then it's very easy to do a course for this because you know exactly the audience. Now the question is, when we create a course on digital payments, who's the audience?
Yeah.
And when we started with BIP, we spent a lot of time on this, and we thought the reality is that it should be everyone. But when you say it's everyone, then that makes it very, very complex. But to give you some examples of why it should be everyone, is that there's a real need. For example, my world is capital markets. I used to be in capital markets. I used to run a group that worked with the largest insurance company. So capital markets, insurance, I know quite well. My co-founder is different. She's coming from the private banking world. The reality is that all of our friends and colleagues in that space, if you say, do you know what is an interchange fee? 99% won't know. They have never heard of what is an interchange fee. But the business model of half of the largest financial institutions is based on interchange fee. So this is where we said, okay, there's a real need for everyone, whether they work in capital markets, for example, on my side, or whether they are at the management level. So now, how do we create a course for all of those people? And so I think we had to go one level lower and saying, what is the fundamental knowledge that everybody should have? Whether someone like myself in capital markets, someone like my co-founder in private banking should know about digital in the same way as, for example, anybody in financial services should know about cash flow discounting, for example, or should know about using Excel. So I think that was the first starting point, which is let's start with the foundation for everyone, so that when we talk about CBDC, then people understand what it is. Or when we talk about the payment stack, we know what it is. So I think that's the first part. The second part, in terms of localization, there's the part in terms of, I guess, language, but more importantly, topics or way of addressing this. So when we started with BIP, the first discussion on why we started is that Hungary is the first country which last year moved the whole country into instant payments. And so this was an experience which we thought was really useful and important for everybody to know, because just like Fabian said, the whole world is moving into instant payments. But between the experience of Hungary last year or the experience of faster payment in the UK, a decade before, what can we learn, knowing that, of course, in terms of thinking, there's been a lot over the last decades. So I think that was really one of the starting points, which is let's start from the latest in terms of thinking, framework, reflection, to start on something that works for that. And now, so which means that the content works quite well, whether you come from, for example, Hungary, in terms of understanding the way that it will be presented, but whether you have Cambodia, we have a lot of people from Cambodia also, or the UK or others. There's a common, let's call that framework. There's a common way of thinking, which we put in place, saying that when we will talk about CBDC, then CBDC, you will understand what that means, although the implementation will be very different for the digital yuan, for example, or for the Bank of England. But what is common to all of this? So we try to have this taxonomy. And in terms of the part in terms of language, we haven't solved this yet. Because we always get questions in terms of how can we do it in Spanish or Chinese or etc. Yeah. The thing is that all our experts come from like 20 different countries. So do we dub or subtitle or etc. knowing that there's much more content? So far we haven't managed to properly do it. So with the partners of EBTN, if there's anyone who has the experience in this is always something where we're trying to find an answer for.
Yeah. Thank you very much for letting us know. I mean, we as Frankfurt School, actually, we have quite good experience in providing education in different languages. We can chat later on this topic and our lesson learned and experiences by providing even in Chinese, this education and translation. It's technically also interesting experience. So thank you very much to all panelists for giving me the opportunity to ask you questions. Now I would like to move to our members and participants today. It's not only members, but members and associates also joining. We have more than, I think, 90 participants today. Really very delighted about this high interest on this topic. I see there is one question from Rajesh on financial institutions are pooling in fintechs in their ecosystem through microservice architecture-based systems. What sort of challenges do you think this practice will pose in the payment domain? Who wants to answer this question from our speakers?
So, thanks. I can take that, Fatima.
Thank you.
Thanks, Rajesh. It's a very interesting question, and that is the theme that we are seeing globally. The financial institutions are building up. It's very clear that they need to either innovate or build an ecosystem and become partner in it. So there's no solo dance or no solo song. So it's an orchestra, right? So they got to sing and play together. The challenge with the financial institutions are their own legacy, platform, processes, regulatory compliances. On the other hand, we have got fintechs globally, though the regulatory varies significantly for the fintechs globally. But the fintechs, they do not have a legacy and they can adapt and change their business models. And they are basically focusing on the point solutions. And fintechs can't work. They do work in a variety of services, but when it comes down to the plumbing mode, which is the fundamental services, whether it's related to the accounts or payments, they have to rely on to the other financial institutions or the payment domains or the financial network. They can't work by themselves. So having these financial institutions opening up their tech stack through open banking or the open architecture through the microservices platform, it is going to help fintechs. And by helping fintechs, the financial institution has an opportunity to become partner in that ecosystem and take a piece of it as well. So the big banks over here in the European market, US or globally, they are partnering with the fintechs. They are completely focusing on it so that they can be relevant in the market for longer term. So both have got their own challenges. Fintechs has got a challenge with the customer acquisition cost. They have got challenge with the cost of their capital, and they do not have access to the large customer base. On the other hand, the financial services have access to the large customer base, existing customer base. They have got well-defined processes in the systems, and they've got significant capital. So they can only survive in partnership. And as I said, it's an orchestra.
Yeah, Ritesh, if I can comment on that, my take on that is that there is a third party and a fourth party to the mix. Not only fintech, not only banks, because if you would leave it to the banks only, they would actually impose their technology to the fintechs, right? Each of them, which would create new silos, new API silos, and that's not what you want, right? And that's not what the fintech wants neither. So the third element to me is some form of standardization, and you mentioned open banking, right? And so there is a role for for regulators, for policymakers to instill these standards, but to a point, because I think there is a role for a fourth party, which are the market infrastructures, to make this standardization happen in concrete, in the real world, right? And I think if I take SWIFT, where I spent more than 10 years of my life, why is it useful, such a market infrastructure? Not necessarily because of the technology, because technology changed, right? But by the capability to pull together a community of people around the same standard. Now we'll talk about ISO 20022 in payments. And I think there will be more and more innovation coming from fintechs and banks if they actually speed up their adoption of common standards and not try to replicate left and right what they, each in their own silo. And so innovation through standardization, to me, is really the part of the response to the question that was posed on the chat.
Thanks, Fabian. That's really helpful. And thanks for putting a spotlight on that.
Thank you so much. I see from the chat room no additional questions, or did I miss any? No, the question from Dan was already answered in the chat, I see. Maybe following to this question, one more question. Yes, I see. Rajat's second question: what capabilities can blockchain technology bring in the payment domain? How will this affect the developing countries?
Fatma, could I answer the previous question?
Of course.
I was trying to unmute myself, but now I...
Okay.
And I think especially because EBTN is also a lot about training the finance industry and the large financial institutions. I think one of the biggest challenges actually is for banks, and what is the role of banks? And of course, now we're in a world which is much more open, driven by regulation. For example, like open banking. That means that fintech companies can very easily integrate into banks. But what is the role of a bank? And what is the future role of a bank? And a big risk if they don't properly manage this. I'll just give you two examples from other industries. You've heard about, of course, Deliveroo and Just Eat and etc. Those platforms now are facing the customers directly. It's really difficult for the restaurants now to keep the relationship with their customers. So they're losing a lot in terms of basically client relationship and pricing power. Same thing for the hotel industry, for example. Now the hotels are not facing the customers directly. It's Booking.com or Expedia. So the hotels now are one step removed from the customer and find it very difficult to interact directly. There's a real risk for banks to have all those fintechs facing directly the customers and being removed from the customers and lose in terms of pricing power, etc. It's a bit conceptual, but there's a real issues of knowledge gap here, which is if we talk about fintech, we're talking about tech companies. At the end of the day, they're tech companies and they operate like tech companies and they think like tech companies. Banks are still thinking like financial companies, which means that there's a huge knowledge gap in terms of banks not understanding the way it works in the digital world, in terms of, for example, search engine optimization. I can guarantee you that 99% of people in a bank do not know what is SEO. But it is at the core of all tech and startup companies today. So there's a real knowledge gap that will make it very imbalanced for banks if they want to be part of those discussions with fintechs where they don't understand everything which is happening in the space. So I think that's one of the main challenges, which is the role of banks. And very quickly, if they don't understand those new ways of working in digital, they will just lose to players which are much faster.
Thank you, Hui. So I see we have some more questions arising here in the chat room. We have one question from Bola Bista. The world is moving towards digital solutions and simultaneously decreasing the operation costs. What security measures shall be taken into consideration as a digital platform is taking new heights of fraud are not to be taken as granted? A country like Nepal has till date not adopted any such security measures, and most of the citizens are still not aware about the digital platforms and security measure to be adopted. So, Ritesh, do you want to respond to this question?
Yes, when it comes down to the payments of financial services, the fundamental challenge remains the same, regardless of the types of the payments or the types of financial services. And fraud has taken a center role for the longest time. And we have seen tremendous growth in terms of the solutions available in fraud. And the more focus is around the use of the artificial intelligence and machine learning in fraud. That's become cliche in artificial intelligence, though. The variety of solutions, especially the banks, need to focus around the product and the services itself and embed the security in the product and services. And it's not only down to the banks, it's about the community practice, especially when it comes down to the fraud. Because even with the security products, with the fraud prevention products, you could be as intelligent as the data that you hold. So as a country, the consortiums should be there. And globally, there are a few consortiums at the moment which are in making and some are existing, especially to counterfeit the fraud, that they share the data in real time. Because of the digital channels, the fraud has become significantly sophisticated. But there are multiple ways you can curb the fraud in payments and banking, because the most common fraud in payments is the friendly fraud in the e-commerce space, or the other types of fraud, smishing, phishing. These are very common fraud methods and the tactics which banks can easily curb by implementing the right solutions.
If I can, I'm much more pessimistic on especially on money laundering. And again, bear with me, I come with a B2B institutional hat on. There was $6 trillion of financial crime in 2018. $6 trillion, this is 7% of the world GDP, if I'm not mistaken.
Wow.
Yeah, 7%, okay? Banks have been fined $11 billion for money laundering violation in 2019, in 2020, sorry, 80% increase compared to 2019. Just to give you some figures, I'm not the last doom here. And the financial institutions spend every year $180 billion on trying to solve fraud, but it doesn't work, right? They spend $180 billion. Fraud is 6 trillion, 7% of the world GDP, increasing 80% compared to last year. So there's something broken. And I think what is broken is to the point that Ritesh was making is, and I talk from experience, fraud is always playing the system and the lack of collaboration and within the actors. If I want to do a fraud, I'm not going to do all my fraud on MasterCard. I'm not going to do all my fraud on Swift. I'm going to pick and choose some casino left, some ATM in another country, some network, and play time zones and you know, and do social cyber stuff. So it's a very complex problem. But the only way to solve it is much more transparency and collaboration between actors, not only banks, by the way, it's government, it's technology companies, but it's really a huge issue. And the more digital we are, the more, doors that can be open for fraud. So to the countries who are embracing digital finance, I think, you know, having a very sound policy and technology in place to look at cyber, to look at fraud, and participate in international gathering, exchanging information with other countries is the only way. And then educate the end user, but we already talked about that.
Yeah, thanks, Fabian. I mean, this yeah, the more digitalization, the more openness for fraud is really a reality. It's not only in developing countries, it's really also in developed countries, sometimes even more in developed countries. So I think this is the challenge we will be fighting in the next future. I see that we have 2 more questions. With the last questions, I would come to the end of today's webinar. I see Rajesh has tried second time with his question. So what capabilities can blockchain technology bring in the payment domain? How will this affect the developing countries? Fabian, maybe since you were already in this topic.
Yeah, and look, everyone can have his own view, religion about blockchain, right? And I'm sure if we talk for 2 hours, we will have different opinion. What I really find interesting right now is what digital central bank are looking at, honestly, because we all know, right? We all know that money is central bank prerogative to manage and issue money, actually, right? So if a central bank is saying, you know what, maybe Ritesh or Hui or you, Fatma, or me, we can have direct accounts with a central bank, right? That's what is being discussed. I don't say it's good or bad, but if that would happen to the point of Hui, what do the banks do? I mean, you know, what does it mean for banks? And I think this development and the central bank digital currency was obviously leverage in most cases leverage a digital distributed ledger technology. So I think to me that's really the potential game changer. For the rest, I mean, there's been lots of attempts by different consortia and companies to do cross-border payments via blockchain. I'm not sure this is a silver bullet. I'm sure you can do. Look, M-Pesa is not blockchain and it works super well.
Perfect.
So there are many solutions, but what interests me is really what the central bank are going to do on that matter.
Yes, that's a discussion we currently have also in Germany in this regard. See, Neil Bose has a question. How do you see the decentralized finance in payment finding more transaction across emerging economies across APAC, LATAM, and Africa region? I think this refers again back to the question we have discussed with Ritesh, right?
Yep.
Or perhaps.
Hui?
Or Ritesh, I don't know if you want to answer.
No, please go ahead, Hui.
Yeah.
No, just, and it's a bit linked, to the previous one, also on blockchain. And I think what is fundamental about blockchain is that, and we're not, I know there's a lot of hype on blockchain, 4 years ago, when everybody was talking about blockchain, and a lot of people were saying, launch a course on blockchain and Bitcoin. We didn't want to do it because we said there's too much hype and we think it's not ready yet. It has changed. It has changed because a lot of money and resources have been invested in the space. And what has happened is that now, thanks to all these resources and money in blockchain, what we have is that we're starting to have pieces of architecture, of infrastructure that works for payments, it was very difficult before to innovate in payments because it requires a lot of money, a lot of infrastructure, etc. So if you are anywhere in any small country, it's really difficult for you to innovate in payments. How do you do it? Now, basically, with what we're seeing on all these initiatives for blockchain, it's much easier to innovate, even if you're a small organization or a small group of people, because in terms of the infrastructure, a lot of is already there. And especially in terms of knowledge and expertise, there's a lot of knowledge and expertise now across the world. And so that means that decentralized finance, I think this is very complex. There's going to be a lot of different ways of thinking about it. But what is very clear is that the process for innovation has now hugely accelerated. So that means that we're going to see a lot of experiments pretty much everywhere, which can be local. Was experiments before had to be at the global level because the barrier to entry was so high. Now we're likely to see much, much more local experiments. And I would say almost like each country or each region could have its own implementation. And I think this is a part which is interesting.
Thank you. I would like to finalize now the today's webinar with thanking to all of my speakers, Gergely, Hui, Ritesh, and also Fabian to say thank you so much for in enriching today our webinar today. A special thanks from the institutional side also to Budapest Institute of Banking, and also to CFTE from institutional side for your insights. It was really very insightful for all members. If there are any questions to the education perspective or any of the speakers specific questions, please do not hesitate to contact us, to contact Felix. He will link you to the, or to connect you with the speakers, with the institution to respond to your questions. I would also like to use this opportunity to thank you, Katapal, for supporting and organizing the background with Felix and with Maria together. I think it was a very good job. Thank you so much. And with this, I would like to thank you and maybe to remind you to our next webinar, which is about ESG investing. It will be in June, end of June. And Felix again will invite you to this webinar and send you also ahead, maybe 1-2 weeks ago, before the invitation and the outline. Thank you so much also for your questions. Really enjoyed and learned a lot today. Thank you. Have a nice afternoon from Germany.
Thank you very much.
Bye-bye.
Thank you very much.